The current live trading price for Big Bear AI Holdings Inc. is $7.81, showing an intraday decline of approximately 2.2% from its previous close. Now, if you're watching this stock, that daily dip might seem like a simple pullback after a recent, very public run-up. But what the top-line numbers don't tell you is the real story bubbling beneath the surface. A quiet but significant shift in the stock's ownership structure that is fueling this narrative. While the retail crowd, the folks who might manage their portfolios on a platform like Robinhood, have been the most vocal drivers of this name in recent months, a new class of investors has been quietly accumulating shares. The big story here isn't the daily volatility, it's the institutional vote of confidence that's been building behind the scenes. Goldman Sachs, for example, has recently increased its position, a detail that many casual investors might miss, but it's a detail that provides a layer of credibility to the story. This kind of institutional activity is a direct counterpoint to the common perception of BBAI as just another meme stock or a highly speculative play driven by internet chatter. It's the tension between that expectation that BBAI is a short-term high-risk trade and the reality of sophisticated long-term players taking meaningful positions that makes this stock so interesting right now. The common narrative for BBAI has been a tale of two worlds, the promise of a forward-looking AI company and the choppy, often volatile price action of a small-cap stock. The stock has been on a wild ride, and most people associate it with the broader AI hype that has lifted names across the entire sector, from NVIDIA stock to lesser-known players. Its massive surge over the past year, up over 400% from its 52-week lows, is a powerful testament to this momentum. On the one hand, investors see the potential for a company operating in a very hot space. On the other hand, the reality of its financial reports paints a different picture, with persistent net losses and a challenging path to profitability. This is the central conflict. Investors who rely solely on the excitement around AI might not be looking closely at the quarterly reports showing an 18% revenue drop and a significant net loss in the most recent quarter. A lot of online investing discussions gloss over these hard numbers, focusing instead on contract wins and speculative future growth. It's a classic case of expectation versus reality. The expectation is that AI companies are all on an unstoppable path to growth. The reality for BBAI is that it's a company still finding its footing, and its success is far from guaranteed. Breaking down the recent trading activity, the picture becomes even more complex. The high trading volume we've seen on days with significant moves, whether up or down, points to a battle between bulls and bears. This isn't just a simple upward trending stock, it's a highly contested name. The significant options activity, with a high concentration of call options, suggests that a lot of traders are betting on continued upside, perhaps encouraged by news of new contracts. This is the short-term, speculative layer of the market. Then you have the institutional layer, the fact that a fund like BlackRock has also loaded up on shares, as some recent reports suggest, adds another dimension to this story. These are not just retail traders on Fidelity's mobile app or interactive brokers platform making quick trades. These are large, well-funded institutions building long-term positions. Their moves suggest they see a more durable, fundamental value story here than what a simple glance at a stock chart or a quick read of a headline might reveal. The company's recent announcement about deploying its AI solutions with the U.S. Navy for maritime domain awareness is a perfect example of a new contract that fuels the bullish narrative. But the question is, how much of that news is already priced into the stock? And will the revenue from these contracts be enough to turn the company profitable in the near term? That's what you have to consider when you're looking at a stock that has already run up so dramatically. To understand the core business, Big Bear AI operates as a provider of mission-ready AI solutions for defense, national security, and critical infrastructure. They use AI and predictive analytics to help customers make better decisions in complex environments. Their work with government agencies, particularly in defense, is a major component of their business model. They have a long list of partnerships and contracts, and this is where the bullish case finds its footing. Their technology is designed to operate in challenging, low-bandwidth environments, which is a key differentiator. For example, the recent contract to provide AI solutions for a U.S. Navy exercise shows their ability to secure high-profile government work. This is the reality of their business. They are a legitimate player in a crucial sector. But the reality of their financials is also clear. The company is not yet profitable. The revenue from their core business is not growing fast enough to offset the costs of developing their technology and securing these large, often lengthy contracts. This is where a lot of investment platforms, from Schwab Intelligent Portfolios to Fidelity Investments, would flag the stock as a high-risk proposition based on traditional metrics like price to earnings or profitability. The market narrative and the fundamental numbers are in a direct confrontation here, and how you approach this stock depends on which side you believe will ultimately win out. As we look ahead, the future for BBAI hinges on a few key catalysts and risks. On the positive side, the company's backlog of over $385 million in future contracts is a significant asset. This provides a clear, if not always predictable, revenue stream. If they can successfully execute on these contracts and convert that backlog into realized revenue, it would be a major step towards addressing their profitability concerns. The company's move into new sectors, such as commercial logistics and airport security with its VeriScan biometric system, also presents a new avenue for growth. This diversification could help them reduce their dependence on government contracts, which can be subject to delays and political headwinds. However, the risks are substantial. The company's ability to turn a profit and manage its cash burn is still an open question. Another risk is the competitive landscape. While BigBear.ai has carved out a niche in defense and government work, they are competing with much larger, more established companies, including giants like Palantir Technologies. The stock's heavy reliance on the speculative nature of the AI market also makes it vulnerable to a broader sector pullback. If the hype around AI cools, or if macroeconomic conditions worsen, BBAI could see its stock price fall faster than its more fundamentally sound counterparts. This is where self-investing can be particularly challenging. You have to be able to sift through the noise and the hype to get to the core of what's happening. The analyst community, for its part, seems to have a more cautious outlook, with some price targets suggesting a notable downside from current levels. This is another piece of the reality that often gets overshadowed by the more optimistic market narrative. So you have this constant push and pull, the optimistic belief that BBAI is on the verge of a breakthrough, and the sober reality that it is still a small, unprofitable company with significant hurdles to overcome. Thinking about all of this, what do you see as the biggest factor for BigBear.ai's future success? Is it the government contracts, the commercial applications, or something else entirely? Comment below with what you think will be the most important catalyst for this company going forward. It's a stock that challenges the traditional investment models and requires a deeper understanding of market psychology. The simple fact is, the expectation that any AI company will succeed just because it's in the right sector is a trap. The reality is that companies like BigBear.ai have to prove their business models work and can be scaled into profitability. The recent surge in institutional ownership suggests that some of the big players see a path to that outcome even if the financial statements haven't caught up yet. This is a story about a company trying to bridge the gap between its promising technology and its challenging financials, and the market is still trying to decide how to value that tension. You have to be willing to look beyond the surface level of the stock's daily movements to see the underlying forces at work. Whether it's the trading on a platform like SoFi Invest or a more traditional individual brokerage account, the principles remain the same. Understand the story, challenge the assumptions, and align your expectations with the reality of the business. The ultimate test for this company will be its ability to translate its impressive list of contracts into a sustained and profitable business, turning the market narrative from pure speculation into a grounded investment case.